This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. The top stories this hour. President Trump says his Russian and Ukrainian counterparts will meet for a trilateral meeting. It comes after hours of talks with European leaders in a bid to end Russia's war in Ukraine. Asian stocks set for a muted open as investors look ahead to the Fed's Jackson Hole Symposium on Thursday. And Intel shares slump after the Trump administration is said to be in talks with the firm for a 10% stake.
Take a look at how we're setting up for the Asian market opens. Of course, we had Nikkei stocks rising to record highs for a second session. Right now, futures unchanged at the moment, but this after the Japanese yen-led losses against the U.S. dollar. Of course, we are watching earnings day as well in Australia. We had BHP's full-year profit falling 26%. We had some self-demand from China really affecting those results. We'll head to Australia for those numbers. At the moment, we're seeing Sydney futures trading to the downside of 0.25%. And of course, we continue to watch Chinese stocks as well. The offshore yuan holding steady, but this after we saw the rotation to mainland Chinese stocks from bonds. But it's really the bond market action that we're following. Treasuries also fell for a third consecutive session. Of course, it's a big week at Jackson Hole. We're watching central bankers take a look at how U.S. futures are setting up. We had seen it really trading in a narrow range. Right now, still not a lot of movement. We have seen some big gains, though, in drone manufacturers in the extended session. That from those conversations coming from President Trump and President Zelensky now reports that potentially there could be a $50 billion U.S. dollar deal when it comes to drones by Ukraine. So we continue to watch that sector as oil is also under a little bit of pressure. We actually saw it gain in the overnight session, really tempered expectations of more Russian crude hitting the markets. And this, of course, coming at a time when Avril, it looks a bit challenging to get to that quick resolution on a truce around Ukraine.
Yeah, we are still trying to unpack the outcome of that meeting. President Trump outlining plans for that meeting between the Ukrainian President Volodymyr Zelensky and his Russian counterpart Vladimir Putin in the meantime. And he says there will be a trilateral summit following a meeting with European leaders at the White House. Bloomberg's Washington correspondent Tyler Kendall is with us. Tyler, so a couple of things have happened in the past couple of hours. We hearing how the German Chancellor says there could be a meeting between Putin and Zelensky in 2 weeks. The Kremlin, based on reporting, also doesn't seem to be committed to a trilat. Maybe recap what we know so far.
Yeah, hey, Avril. Well, it was a really high-stakes day here in Washington, and it appears that President Trump's meetings with the Ukrainian President Zelensky, as well as European leaders, about half a dozen of them that descended to the White House today, have concluded. And President Trump posted earlier last hour that progress has been made, as you mentioned, towards potentially a bilateral meeting first between Russian President Vladimir Putin and Ukrainian President Zelensky. He says that this will happen at an undisclosed location, and then the German Chancellor Merz added to this, saying that that could happen within the next 2 weeks. But again, as you mentioned critically here, we heard from Russian state media that said that the pair rather discussed about raising the level of Russian and Ukrainian representatives taking part in direct talks, but did not talk directly about this idea that there could be a bilateral followed by a trilateral, according to President Trump. It would be, of course, a pretty remarkable development as we wait to see how this is going to evolve here, because today President Trump held what essentially looked akin to a G7 summit. So many leaders coming to Washington on such short notice, so showing support to Ukraine as they try to work towards some sort of movement here to end the war.
Right. We're hearing from the Ukrainian President Zelensky speaking to reporters in D.C. right now, saying that it was their best meeting with President Trump so far. It was really a contrast from what happened in February when they had that bitter public clash.
An incredible contrast. When that meeting, I was actually there at the White House that day, and the conversation ultimately devolved. It ended early. They canceled a press conference back then, but today there was much more of a relatively warm welcome for both the Ukrainian president, but also for those European leaders, many of whom I think it's fair to say have a relatively warmer relationship with this White House, like the Italian Prime Minister Giorgia Meloni, the UK Prime Minister Keir Starmer, of course, one of the first to ink a trade trade deal with the U.S. But even though this was a relatively warmer reception, they were still, of course, dealing with these really tense issues. And we know that there are a lot of issues here going forward. Perhaps the push and pull that we really saw today, one, of course, having to do with the future when it comes to territory and how that's going to factor into any potential deal. But the second, Shery and Averill, really has to do with those security guarantees that Ukraine and also our European allies want to see from the United States. And earlier today on Balance of Power, I had the chance to speak to former retired Rear Admiral Mike Hewitt. He spent 31 years in the U.S. Navy, and he says this is the linchpin. This is the number one issue to look out for here. What are those U.S. security guarantees actually going to look like going forward? We heard from President Trump saying that the U.S. will be involved in those guarantees, but we do need some more details. The White House has floated this idea that there could be something akin to NATO's Article 5. Article 5-like is the term that we heard Special Envoy Steve Witkoff use. But what that will actually look like in practice, analysts seem to be in agreement that it will likely look like bolstering Ukraine's own defense forces. But whether or not that means reassurance forces or air cover, intel sharing, things like that, we're still waiting on those details.
Tyler, as you were speaking, we also got another line from Zelensky saying it's important that Ukraine has peace, not just a pause, also discussing those security guarantees as a key issue, as you talked about just a short while ago. I mean, are you getting the sense that the tone from the Russian side at this point, based on what's come out of the meeting between Trump, Zelensky, European leaders, is that they could potentially skip a ceasefire and go straight into peace negotiations?
Well, we've actually heard President Trump himself advocate for this approach. He said earlier today that he actually likes the idea of a ceasefire, but that he doesn't think it's necessary, in his words, and that they could go straight towards launching towards peace talks. But there are differing views here about this strategy. On one hand, for example, you had the Secretary of State, Marco Rubio, over the weekend when asked about this strategy, say, look, one of the biggest issues with a ceasefire is that you have to maintain it, you have to uphold it, and that can cause trouble. But then you have other analysts. We spoke to Melinda Herring earlier today on Balance of Power from the Atlantic Council, for example, who said that this is just going to give Vladimir Putin time to rebuild, to regroup. It buys him time here because there doesn't have to be a pause in the fighting. It's something that we're watching very closely here, how a potential deal could actually unfold if there isn't a pause in the fighting. And as we try to piece together whether or not there's going to be a bilateral, a trilateral meeting, no doubt this is going to be really one of the main sticking points in this conversation. What are they actually trying to achieve as the main objective here going forward?
Bloomberg's Washington correspondent Tyler Kendall, as we continue to watch those lines coming from President Zelensky as he's speaking to press right now, saying that he thinks this is a big step forward, that Trump supports the return of all prisoners from Russia as well. Of course, we continue to follow the developments around the conflict in Ukraine. White House trade advisor Peter Navarro also slamming India for buying Russian oil as diplomatic tensions rise with New Delhi. Writing in the Financial Times, Navarro described India's purchases as opportunistic and deeply corrosive against efforts to curb Russia's war machine and isolate the Kremlin. Navarro also linked the purchases to India's trade barriers, claiming the dealings come at the expense of the U.S. Now, this global geopolitical chess match continues today in New Delhi. Chinese Foreign Minister Wang Yi due to meet with the Indian Prime Minister Narendra Modi earlier, both sides expressing hopes for better relations in a bid to strengthen ties amid unpredictable U.S. trade policies.
We should develop confidence to dispel interference, expand cooperation, and to further consolidate the momentum of improvement and development of China-India relations so that while pursuing our respective rejuvenation, we can contribute to each other's success.
Having seen a difficult period in our relationship, Excellency, our two nations now seek to move ahead. This requires a candid and constructive approach from both sides.
Our Chief North Asia correspondent Stephen Engel joins us now from Hong Kong with the latest. And Steve, definitely the narrative from both sides seem pretty positive and optimistic about future ties. What's at stake?
Well, clearly the moves on the trade front from the Trump administration, you mentioned what Peter Navarro mentioned about the Indian purchases of Russian oil that allegedly feed the war machine in Moscow, essentially has soured those kind of relations between Washington and New Delhi. And this has provided an opening, if you will, for better relations between China and India. They have been frosty over the years, including 5 years ago when there was a border dispute between India and China. They're working through those differences. They see, both of them see opportunities, and that's why Wang Yi is there. It's his first trip to India in 3 years. He met, as you just heard from Jaishankar there, the external affairs minister. He's also planning today to meet with India's national security advisor, Ajit Doval, before calling on Prime Minister Narendra Modi today. This, of course, will likely set the tone for Modi when he goes to China at the end of this month for the SCO, the Shanghai Cooperative Organization annual meeting in Tianjin, which I will also be likely attending. That is an opportunity for Modi to go to China for the first time in 7 years, have potentially that meeting with Xi Jinping. So a lot is at stake, obviously, later today in New Delhi when Wang Yi, the top diplomat from China, the foreign minister, meets with the Prime Minister of India as they try to repair their relationship. Both of them, as we just heard, saying the right things. Also, Wang Yi essentially alluded to the U.S. action on the trade front as overwhelming bullying. He didn't mention the United States, but we can kind of guess who he's referring to.
Yeah, reading between the lines. Steve, on the government level, these warmer bilateral relations, what are you seeing among the private sector, private enterprises, perhaps looking to capitalize on this?
Well, obviously, the private enterprises are looking for opportunities to tap into these warmer relations. There's been suspicion on the geopolitical front, the bilateral relationship front between India and China, and that has led to restrictions of investment both ways. So China has been reluctant to essentially export its technology to places like India, which could be a manufacturing rival to China, while the Indians have been reluctant to essentially allow large-scale investment flooding into the Indian market. That's why we're hearing from various sources that the Adani Group, as well as Reliance Group of the Ambani, as well as other large Indian conglomerates, have been quietly, sort of under the radar, making inroads to get deals going. JSW Group is another one that's pursuing these under the radar deals. So we already know that Adani has had talks with the likes of CATL, possibly also leading firsthand a possible battery manufacturing tie-up with BYD. JSW, I mentioned them. They've also announced a deal with Shery Automobile. Reliance also said to be looking quietly at some stakes in Chinese battery tech firms. So clearly they are looking at those opportunities. And again, the tone is being set between Wang Yi and Modi, perhaps today, for even higher level a meeting between Xi and Modi, and what fruits will be born from that meeting later this month in Tianjin is being watched very closely by these Indian and Chinese conglomerates.
Our Chief North Asia correspondent Stephen Engel there with the latest on those India-China talks. But of course, we continue to follow the negotiations around the truce in Ukraine, as well as we hear from the Secretary General of NATO, Mark Rutte, coming out and saying that President Putin and Zelensky will now discuss meeting and that they have to discuss more details on security guarantees. They will hold another virtual meeting with President Trump as well and the European leaders, and not surprising that the U.S. has said it's against NATO membership for Ukraine. President Zelensky also continuing to address the press, saying that he has confirmed to leaders that they're ready for a bilateral meeting, that bilateral meetings need to be followed by a trilateral meeting as well. President Zelensky saying that they have to meet without conditions and decide on the next steps. We'll continue to follow the latest developments around Ukraine. We have more ahead. This is Bloomberg. we're watching some big moves in the Treasury space as well, because we had 3 sessions of losses ahead of Chair Powell's speech at Jackson Hole on Friday. We had seen a lot of pressure on Treasury yields because traders have started pricing in a quarter-point reduction in September. But overall, the data from the U.S. has been mixed. And we also had some movement coming from the U.K., 30-year inflation-linked yields hitting the highest since 1998. And this is to mean that it surpassed those levels recorded in 2022, actually, when former Prime Minister Liz Truss's economic plans triggered that fire sale dynamic. But this time around, it lacked a clear catalyst. Investors globally are demanding greater compensation for duration risk. And we've seen Indian bonds also selling off and falling by the most in almost 2 years. Really, those fiscal concerns pretty much in focus at the moment. And all of this, of course, Avril, as we continue to follow the latest developments with President Zelensky and the truce in Ukraine.
Yeah, Shery, I think we're getting some lines out of the Ukrainian president, and he acknowledges that Trump has been supporting the return of all prisoners from Russia. There you see the Ukrainian leader speaking outside of the White House. Also, previous indications in the past hour or so saying that they've confirmed to leaders that they are ready for a bilateral. So essentially here, a meeting between Putin and Zelensky as the next steps before we see some sort of a trilateral. Does this move the needle? That is the big question on whether we get some sort of a ceasefire. As we've been hearing from our correspondent at Washington earlier, the Trump side seems to be advocating for straight to peace talks, negotiations, rather than having some form of a ceasefire in between all that, Shery.
And of course, we continue to hear from President Zelensky, as you mentioned, saying that Ukraine needs financing for those security guarantees. We had heard from NATO Secretary General Mark Rutte as well, talking about another virtual meeting with President Trump and the EU leaders. It's been really interesting to see that backing in force coming from diplomatic officials from Europe as we had this meeting between President Zelensky and President Trump. President Zelensky continuing to speak in Washington, D.C., saying that there were no unacceptable decisions at talks today. Remember, he classified the latest talks with President Trump as the best that they've ever had before. And what a contrast from what we saw back in February, which erupted into that bitter public clash. This time around, really President Zelensky and President Trump praising each other throughout the afternoon. And President Zelensky right now saying that there were no unacceptable decisions at the talks today. But we heard from the Secretary General Mark Rutte from NATO saying that the U.S. has said that it's still against membership for Ukraine when it comes to NATO. We'll continue to follow these latest developments in D.C. As we watch the geopolitical context surrounding that ongoing war in Ukraine. This is Bloomberg. And we are watching Intel in the after-hour session. Bloomberg has learned that the Trump administration is in discussions to take a stake of about 10% in Intel. If it goes ahead, that would make the U.S. The chip maker's largest shareholder. So let's get more on this Bloomberg scoop now with our Asia Tech correspondent Annabelle Drewlers in Hong Kong. And we had seen some reporting about this last week, and the market reaction on Intel has been pretty different from what happened last week. So what are we expecting the shape of this investment to take?
Yeah, so essentially, instead of receiving grants under the US CHIPS and Science Act, those would be converted to equity from the US government instead. So Intel was looking to receive nearly $11 billion through the act. That would be converted with the Trump administration looking to perhaps take, as you said, around a 10% stake in the business. It's not being confirmed, but we are speaking with at least one within the Trump administration, plus other people that are familiar with the matter. Maybe the size of that stake could shift. Of course, maybe the Trump administration administration won't proceed at all with the plan. But as I said, it is important to note that Intel was already in line for US assistance, but doing it this way sort of speeds up that timeline because grants would have been dispersed over a much longer period.
Belle, would this government assistance be enough to help Intel turn its business around?
Yeah, that's, of course, the really big question. We know that Intel has faced a raft of different issues like stagnant sales, continuing losses. Lip-Bu Tan, the new CEO, has a very big job on his plate, essentially, to deal with. He's mostly been focused on cutting costs, eliminating jobs so far. What's interesting to note as well, and what's been confirmed just in the last few minutes, is that SoftBank is likewise planning to take a $2 billion investment in Intel's common stock. So very interesting to see that movement after hours, because Intel, as you said, Shery, during the session, it closed around 4% lower. You are seeing that reversed in late trade. So investors clearly liking the sound of this $2 billion investment. SoftBank looking to pay around $23 per share of Intel common stock. The transaction, of course, subject to the customary closing conditions.
Yeah, all about investing in the semiconductor innovation space and technology, according to SoftBank's latest statement. But separately, on those investments, we just got confirmation from Foxconn as well in its plans for involvement with Project Stargate in the U.S. What do we know?
Yeah, so this one actually relates back to SoftBank as well, because what we understand is that essentially SoftBank is acquiring a US factory that's owned by Hon Hai or Foxconn in Ohio, but Foxconn is going to continue operating that site. So this is actually confirmation from Hon Hai now, the chairman, Young Liu, who is confirming our Bloomberg reporting as well on this. So this is an electric vehicle plant in Ohio. SoftBank has acquired that. It's going to be turned into an AI server production plant instead. And essentially SoftBank is going to be supplying manufacturing gear to the factory. It is sort of a JV between the two different companies to make AI data center related equipment. So again, another interesting sort of tidbit when we see that further ramp up in investment in generally AI in the US, but also the infrastructure that is needed to make that technology possible as well.
The sort of investment Trump has been advocating for as well. Belle, thank you so much. Annabelle Drawlers for us there. Now, more from the corporate front. KKR-backed South Korean fashion retailer Musinsa is weighing an IPO, inviting several investment banks to pitch as lead managers. Local media say a listing could value the company at around $7 billion, potentially minting a fortune for founder Cho Man-ho. Musinsa's global store, launched in 2022, has grown rapidly, reporting a 25% jump in sales last year to around $860 million. Chinese electronics manufacturer Anker Innovations is said to be considering a Hong Kong listing as soon as next year. The firm's Shenzhen traded shares have surged more than 50% this year, giving it an $11 billion market value. Founded in 2011 as a charging brand, Anker now sells everything from 3D printers to robotic appliances. And Australian biotech giant CSL will spin off its Seqirus vaccine business as part of a restructure. The move will cut the firm's workforce by as much as 15% and reduce costs by some $500 million annually. The vaccine business contributed $2.2 billion of the firm's total revenue of $15.6 billion for the full year, slightly missing estimates. And we'll be speaking with the CSL CEO later on the program. This is Bloomberg.
Forgetting European leaders speaking at the moment after President Trump met with President Zelensky alongside European leaders. President Macron of France speaking right now, saying that he will work with the U.S. on those security guarantees that were discussed, that the Putin-Zelenskiy meeting venue will be defined in the coming hours, that he expects a trilateral meeting that could happen in 2 or 3 weeks. But President Macron making sure to say that if the process is refused, that they need to apply more pressure on Russia. Of course, the risks are rising also for Ukraine, given that President Trump, after meeting with President Putin, backed off his threat of more sanctions on Moscow, not to mention that he also dropped demands for a ceasefire as a condition for further talks. But we are hearing from President Zelensky as well that he expects a bilateral meeting with President Putin and then a trilateral meeting with the U.S. as well. Let's discuss all of the latest developments with Leslie Shred, a non-resident fellow at the Atlantic Council's Eurasia group, who joins us now. She is also founder of national security-focused communications from Rising Communications. Leslie, great to have you with us. So we continue to get these latest comments coming from various leaders from Washington, D.C. The consensus seems to be that President Zelensky will be meeting President Putin and also, again, President Trump in the next few weeks. How much progress do you think was made during these latest negotiations?
I have to tell you, I think we have had more progress towards peace in the last 3.5 days than we have had in the 3.5 years prior to this. If you're watching what many of these European leaders are saying as they're leaving this meeting, they're praising President Trump. They all seem very hopeful. And I think that this is great news for the people of Ukraine.
So what's next here, and what does President Zelensky need to get out of the next few conversations?
It appears as though the next step is going to be this meeting between Zelensky and Putin. And it sounds like, you know, everybody that was in that room is very hopeful that this is going to happen and that it is going to happen very soon. I'm also very hopeful of that. So if that does happen, I think that that is an incredibly important step towards progress. If it does not happen, however, President Trump has made it clear that there will be severe consequences for Putin. He's already said that he's looking at very extreme high tariffs on any country that is fueling Putin's war. We're talking about additional crushing sanctions on Russia. And I think the president has many other tools in his tool belt that he could use. For example, Congress could go ahead and pass Senator Graham's Russia sanctions bill. That would be really helpful. We could fully implement repo here in the United States and ensure that European leaders are doing exactly the same thing. Right now, Belgium is sitting on something like 250 billion euros worth of frozen Russian assets. If we could liquidate those, give them to Ukraine, it gives them a lot of money that they can use to buy the weapons that they need and also to try to help rebuild their country that Putin has destroyed.
Leslie, as you say, Washington sounds like it has the tools in its box. But to what extent do you think the meeting overall has shifted the pressure back to Russia?
I feel that the pressure now is on Russia. It sounds like everyone inside of that room said they're ready. They know exactly what they want. The President Trump has come out and said there will be security guarantees, not just with Europe, but also with the United States. All of this is putting a lot of pressure on Putin. And President Trump has made it clear that if he continues to drag his feet or refuses any of these meetings that the president wants to get set up, the following will be severe consequences. So I think President Trump's pressure campaign has really worked. I also think that this meeting today sent a very powerful and important message, not only to Putin, but to the United States adversaries around the world, that the United States and Europe are united together. We stand together, and we will continue to stand together.
Does that unity include perhaps a possibility of more consistent military aid from the U.S. to Ukraine?
The United States has been providing significant security assistance to Ukraine for a while. And I do think it's important to note that President Trump was the very first U.S. president to send lethal aid to Ukraine. It was the javelins that he sent back in 2017 that gave Ukraine a fighting chance in those first few days of the war in order to be able to stand their ground and continue the fight. President Zelensky and the people of Ukraine will tell you, without those javelins, Ukraine would not be where it is today. So I think the security assistance that has been appropriated by Congress, it will continue to flow as it has been. And I do think that the deal that the president has struck between NATO and Ukraine to allow NATO to purchase U.S. weapons and give them to Ukraine is also incredibly important. Don't forget as well that many of our European allies have Patriot batteries in their country. I think that Germany is sitting on something like 9 Patriot batteries right now. These are things that could be sent over immediately to Ukraine to help them defend their skies against Russian attacks.
You've said that everybody seemed pretty committed in backing President Zelensky and ending this war from Russia. But at the same time, we've heard from President Trump that when it comes to those tariffs on anybody helping Russia, he said he's going to hold off on those Chinese tariffs, at least after these conversations with President Putin. We have seen him not necessarily threaten more sanctions on Moscow. He's dropped demands for a ceasefire as well. And actually, President Macron speaking right now saying that he doubts President Putin actually wants peace. So how do you really take President Putin to the table when we know that he's not really backing off on those territorial demands?
I think that what President Trump is trying to do is position himself as a neutral arbiter in this conversation. He wants to make sure that the United States of America is providing Ukraine and Europe as much leverage as they possibly can have, but at the same time that Putin and the Russians believe that he is going to be a neutral arbiter in these conversations, and that way they're going to be more willing to sit down.
When it comes to European leaders, how can they continue to apply the pressure?
Like I said, first of all, I would strongly urge European leaders to really look at the Repo Act. There is a lot of frozen Russian assets that are inside of Europe that could be liquidated and that could be given to Ukraine to help them right now. I think that European leaders are also doing a really great job committing to spending 5% of their budget on security is going to be significant improvement for NATO. The fact that they all showed up today is wonderful. I think it just really shows a strong, united Europe, and I think they should continue to do that. And just reminding the American people and people in Washington, D.C., that Europe is now committed to its own national defense as well.
Leslie, just very quickly, based on your read of the situation, do you think we sort of skip a ceasefire and go straight into peace negotiations? Is that the lay of the land at this point?
I completely understand why Ukraine wants a ceasefire right now. They want the killing to stop. It sounds like that is not something that's on the table at the moment. So while I would love to see that, I understand why the Ukrainians want it. I just don't know that it's a possibility right now. I think if we can get a permanent peace, though, that is preferred to anything. Short-term ceasefires won't stop long-term killing.
Leslie, thank you. Leslie Shedd is non-resident fellow at the Atlantic Council's Eurasia and founder of Rising Communications. Now, let's also take a quick look at how futures are faring. Of course, we got some of these developments related to investments into the U.S., and that prompted that pop in Intel shares. But aside from that, watching the geopolitical backdrop, are we in a sort of holding pattern, though, until Jackson Hole? For more, let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. So, Garth, I wonder if you could react firstly to what we've been seeing out of Washington, and how much does this help us focus to what Powell might say towards the end of the week?
Yeah, well, I think very much what's come out of Washington for most markets mean that they can set aside geopolitical concerns and look to what Jerome Powell might say later on this week, what sort of response that might generate out of the White House, which has repeatedly called for rapid rate cuts, and also for equities, there's also the question, can the China rally continue? And more broadly, we're waiting on earnings this week from Walmart and a couple of other major consumer-facing US companies. What are they going to tell us about the impact on the ground in the US of President Trump's tariffs?
And of course, we continue to watch that incredible rally in the stock market, but also those moves in the bond space as well. Treasuries continue to lose ground. We have seen also inflation-linked UK 30-year yields hitting the highest since, 1998 or so. What are some of the catalysts right now that investors are watching? Of course, we mentioned Jackson Hole at the end of the week as well. But it seems globally investors are just more cautious about taking duration risk at this point.
Yeah, well, there are a couple of things, on the table today that could add to that aversion to duration that you were mentioning. First of all, that is actually one thing that is trickling out surrounding the Russia-Ukraine situation, which is these reports yet to be confirmed that part of what's going to go on is that Europe is going to step up in funding Ukraine's purchases of US arms. There's been talk of 50 or 100 billion dollars or euros. It's all a little bit unclear, but large amounts. That could add at the margin to the pressure that's helped to drive up German yields and some other yields in Europe, because governments are going to have to borrow to fund those purchases. So that is one minor concern for the bond markets coming out of the talks. And in general, bond markets are wary because there's so much supply coming. Speaking of supply, that's the other thing we've got to look at today, which is there's a couple of debt auctions coming out of Japan today. The one-year bill auction, which normally doesn't get too much attention, but today might. If it's a poor one, that's going to boost the pressure on the BOJ to consider rate hikes sooner rather than later. Meantime, a little bit after that, we get the 20-year sale of JGBs in Tokyo. That looms as a potential pain point for not just Japanese bonds, but for global bonds in that environment you mentioned where yields are rising, especially toward the long end. 20-year sales, both in Japan and the US, have been fraught on a number of occasions over the past few months. This one looks like having the potential to be even more so, given what's been going on, given too that, as my colleague Mark Cranfield was pointing out yesterday, anybody who bought 20-year bonds at the last handful of sales is underwater. The yields have risen, which means the prices are down since they bought. So the question is, how many more times are certain investors going to be willing to go to that well, seeing as they're being delivered losses pretty rapidly after they buy? So if we get a weak 20-year auction in Japan, that will send yields up further out the curve in JGBs and put more pressure on treasuries, and then later on in the day on European debt.
Yeah, the trickle effect we could see again from Japan to the other G10 debt markets. Garfield, thanks so much. Garfield Reynolds, who leads our Markets Live Asia coverage. More ahead on the Asia trade. This is Bloomberg. Let's check in on how commodities are faring after that meeting at the White House between European leaders, Trump and Zelensky. The takeaway or consensus seems to be that there's a reduced prospect of further Russian sanctions. WTI sitting a little soft. Iron ore is the other commodity we are tracking. A bit of a tick up on the Singapore contract. And of course, it's also in focus against a backdrop of earnings from the world's biggest miner that revealed the impact of weak Chinese demand. BHP's full-year profit fell 26% as key exports such as iron ore and coking coal remained under pressure. For more metals and mining reporter Martin Ritchie joins us now. So, Martin, just your takeaways first off, that reaction to the BHP earnings.
Largely in line with expectations from BHP. Profits down more than 20%, as you said, largely due to lower prices for iron ore and for metallurgical coal, both of which are used in steel making, and then offset by a better performance for the copper sector. So largely as expected. The dynamics when it comes to steel in China, look, production is still relatively high. It's plateaued about 1 billion tonnes a year. But we are starting to see more softness in steel output this year. I think we just reported not long ago that steel output in July was at its lowest for any July in many years. So there's signs of softness there. At the same time, exports of steel are doing well still from China. But against that backdrop, it's difficult for BHP, which is still heavily reliant on China's steel industry, to to sustain this kind of stellar profits of previous years.
How difficult has it been for Woodside? Its first half net income has come in below expectations.
Yeah, that's right. That's largely due to some one-off items, some costs linked to the decommissioning of some projects, and then an impairment at another project that they exited in the US. So Woodside, again, largely in line with expectations, but those one-off items giving a big hit.
Laura's Martin Ritchie there with the latest on those results coming from not only Woodside but BHP. And in fact, we'll be talking to their CEOs on the back of their earnings throughout the morning. We also have the CEO of CSL. Subscribers can watch those interviews live on the terminal and Bloomberg TV on the Times on your screen. And staying with Australia, the country has more women working part-time than almost any other developed nation. And Bloomberg Opinion editor Andrea Papuk says it's a missed opportunity to jumpstart its economy. She joins us now. Andrea, so why does Australia have this part-time problem when it comes to women?
Hi, Shery. Yeah, look, Australia has one of the most educated female workforces. Yet something that was actually surprising for me to find out is that a lot of them are employed part-time. In fact, even though we have the same number of men and women in the workforce, a third of women work part-time. And that is a huge talent pool for the government to tap. If it is serious about improving productivity, which is what this meeting this week is about, you have to look at the amount of women who are perhaps not being engaged in the workforce as much as they could be to the full of their potential.
Andrea, as you touched on, the government is meeting with other stakeholders this week to try and address the productivity issue in a way. Why is it so important that the economy fully engages women now?
Look, it's important because they are highly educated. They are willing, obviously, to be part of any sort of economic growth. But there are still impediments there, and one of the biggest issues here in Australia is childcare. So you have to start addressing how you can do that. Now, another thing that women face is so-called part-time cliff. So if so many of them work part-time, they perhaps don't get the same opportunities to become leaders, to progress their, have that career path and end up in position of management where they can influence decisions. Now, that's again something that should be addressed, that should be looked at, and it's an opportunity here. As we're talking about economic reform, it's an opportunity to tap this source, this source of knowledge, as I said, from a highly educated female population.
Andrea, thank you so much. Andrea Papuk is Bloomberg Opinion editor. We'll have more ahead on the Asia trade. This is Bloomberg.
The situation is this, that the US and some other countries have said that they are against NATO membership for Ukraine. The official NATO position since the summit in 2024 is that there is an irreversible path for Ukraine into NATO. But what we are discussing here is not NATO membership. What we are discussing here is Article 5 type of security guarantees.
That the coalition of willing countries, that's 30 countries already working together on security guarantees, will now work with the US on those guarantees, coordinating, and we have already commissioned our teams to do the detailed further work on that. That's really important for security in Ukraine, for security in Europe, and for security in the United Kingdom. The other material outcome was the agreement that will now be a bilateral agreement between President Putin and President Zelensky. That was after a phone call between President Trump and President Putin during the course of this afternoon, followed by a trilateral, which will then add in President Trump.
Hearing there from Keir Starmer and the NATO Secretary General Mark Rutte. And Shery, as we continue unpacking the outcome of that meeting at the White House, a couple of things have come out from it, including how Ukraine's wanting of security guarantees. We're hearing how there could be some sort of Article 5 type guarantee. And along with that, Trump is going to be making arrangements for a meeting between Putin and Zelensky. Following that, there could be a three-way meeting of leaders. Trump also saying that the U.S. would coordinate with Europe on Ukraine security. So a couple of things that have come out from this meeting in Washington, Shery.
Yeah, a very difficult situation here for European leaders as well, right? Because President Macron of France coming out and saying that he actually doubts President Putin wants peace, that he will be working with the U.S. on those security guarantees. But as you said, they would be Article 5 type, not necessarily NATO membership. And we continue to hear the latest on what that could look like. But at the moment, we are waiting for more confirmation on where the venue of these bilateral and trilateral meetings will be. President Zelensky seemed a bit more optimistic, saying that this was the best meeting with President Trump so far. What a difference a few months makes, right? Because back in February, we saw that bitter public clash. This time around, all afternoon, the two leaders were sort of praising each other at a very important time for Ukraine. President Putin, of course, continues to demand regional and territorial claims on Ukraine, and President Trump has backed off his threat of more sanctions on Moscow. So we'll continue to watch the latest developments as we head towards the market opens in Sydney, Seoul, and Tokyo. This is Bloomberg. This is Asia Trade. We're counting down to Asia's major market opens as we follow the latest geopolitical developments around Ukraine. April, of course, we heard the rhetoric coming from President Zelensky saying that this was the best meeting ever with President Trump. He, of course, is expecting now a bilateral meeting with President Putin, followed then by a trilateral meeting as well, as we continue to follow what the security guarantees could look like.
Yeah, encouraging signals out of this meeting from the White House. And as we've been discussing the past hour or so, it's really quite a different picture from just a couple of months ago. So heartening for the Ukrainian side. Does this sort of move the needle towards a form of peace via negotiations, trilaterals potentially coming after bilats, as you say, Shery?
We'll be watching those defense stocks, especially around drones. We have heard of potential investments of $50 billion when it comes to Ukraine-produced drones. At the same time, of course, we are still headed towards Jackson Hole. We do have a Chair Powell speech coming up on Friday. In the meantime, this is the open in the Japanese session because we had already 2 sessions of gains for Japanese stock markets. We're talking about the Nikkei at those record highs. As we're watching BOJ developments, we're watching debt, JGB side developments as well. We do have a 20-year debt sale today. We have seen really global investors shy away from duration risk in the global bond market, so that will be crucial to watch in today's auction. Take a look at the Japanese yen because it was one of the biggest losers among G10 currencies against the U.S. dollar overnight as the 10-year yield holds at the 158 level. We're watching one stock, SoftBank, because we've now heard that they're investing around $2 billion in Intel, so we do have some idiosyncratic news around some names across Japan. Do watch out for South Korean stocks as well. We had seen those losses in South Korea in the previous session, but we continue to watch those potential risks around the export really landscape for this economy as the Kospi now is reversing some of those losses that we saw in the previous session, and the Korean won is holding at that 1387 level. Chip makers, one sector that we'll be watching today, Avril.
Yeah, and among the sectors we're also watching in the Asia-Pacific trading session would include material stocks as well. Out of Australia, we got the earnings from BHP and Woodside. The China demand dynamic, that seems to be figuring into the equation for some of these Australian names. We are seeing the Australian benchmark 410s lower against the backdrop of Brent a bit softer as well. Given how this meeting has unfolded at the White House, does this reduce the prospects of further sanctions on Russian energy? And that seems to be the read-through. But of course, this week it's also throwing forward to the Jackson Hole Symposium. In the meantime, seeing the Aussie dollar ticking up a little against the greenback. Let's bring in Mark Matthews, head of Asia research at Julius Baer. So, Mark, there is a lot going on in the background geopolitically, but investors seem to be quite focused on the Fed rate path. What is your read on the bouncing we saw in the dollar this week and whether this would hold? Because I think you still think it's a dollar weakness story.
Yes, April, we do. And I can understand where there would be a bounce because there's an incredible amount of negativity around the dollar. And if you look at positioning in various surveys in the futures market, I can understand why we are getting a bounce. But longer term, first and foremost, they're running a very wide budget deficit, which I think will probably settle at about somewhere between 5 to 7%. And countries that run that kind of deficit have weak currencies. I mean, if you just look prior to COVID, the U.S. ran a budget deficit of about 2 or 3%. So now we're at about 7%. And Egypt has a 7% budget deficit, and they have a B- rating, which is 14 notches below the United States. So number one, budget deficit. Number two, we're looking for substantial rate cuts. So we're looking for 4 rate cuts between now and March of next year. Normally, when central banks cut rates a lot, the currency goes down. I think it's fair to say there's a lot of unpredictability in U.S. policy across the board. And am I missing anything? I guess yeah, that's the reason why we're looking for the dollar to be weaker over the next 12 months.
Okay, what about U.S. stocks, though? Because they've bounced as well. Yeah. We've seen from these tech earnings the CapEx spend related to AI. Is that fuel for U.S. stocks? And what's your sense of whether this can broaden out? Because it's also about the consumer and the retail earnings that we're getting this week.
Yes, well, 40% of S&P 500 revenues come from overseas. So when the dollar goes down, it's good for them. And for the big technology stocks, it's actually over 60% of their revenues, that come from overseas. With the big spending that the Magnificent Seven are doing on AI, clearly the market is giving them the benefit of the doubt now because all of these data centers and AI chips and cloud systems have yet to be put to use, but they will be plugged in and running next year. And next year, the market will want to see returns. And to your point, they've just spent a tremendous amount of money on AI. I saw a statistic which was $560 billion for the Mag 7 combined that they've spent on AI over the last 18 months. And I think there is an analogy to Wall Street in the 2000s because the Wall Street banks were so big in the 2000s that to move the needle, they needed to do something big. And they chose the mortgage market, which is the biggest debt market in the world. And that didn't work out very well. So I'm not saying we're going to have a global financial crisis, but I am saying that the market will want to see returns on this next year. And there's a big question mark if we will get them.
Mark, I just wanted to pick up. Do you think that there could be further broadening out? I mean, we are also looking at these retail earnings, right? Walmart, Target. What is that going to tell us about the U.S. consumer? Does this mean, that AI-fueled rally kind of branches out a bit in U.S. equities?
No, I don't think the market's going to broaden. I think it's a very concentrated market and will continue to be so. Because the earnings growth is with these Mag 7, which is, the amazing thing is despite the fact they're investing so much money in AI, they're still producing extremely good earnings growth, much bigger than the other stocks in the market. And as much as one could say there is a bubble in technology, and Sam Altman, the CEO of OpenAI, said as much in an interview last week. He said there are similarities between now and the tech bubble of the 1990s. I also have to say that the valuations in aggregate for the Mag 7 are only, I think the last time I looked, 26 times next year's earnings, which is less than half of what the PE got to for the big five technology stocks at the peak of the dot-com bubble.
Given how narrow and potentially fragile this rally is, what's the risk of the Fed disappointing this week at Jackson Hole, with really traders pricing in the 25 basis point cut in September and the rally being derailed?
I think, yes, absolutely. There would be some disappointment if the Fed doesn't cut rates in September, and we are expecting it on the back of the very weak non-farm payrolls that were announced in July, the July payrolls, but also the revisions for May and June. Yeah, there would be some disappointment there. But I think that it's fairly inevitable that we will enter a rate cut cycle, if not in September, then in October. And the reason for that is simply that more and more of the Fed officials are coming out and saying they think that rates should be cut. And we are starting to see softness in some data. The Fed likes to be ahead of the curve, not behind it.
We have seen softness in the economic data also coming from China, and really more speculation that we potentially could see some stimulus. Chinese mainland stocks seem to be getting a boost from that. Do you expect this to continue?
I don't think the breakout in the Chinese market is based on stimulus. I don't think people anticipate much stimulus in China, but certainly more policies that are conducive to economic growth in terms of, being friendlier to the private sector, and that's been a trend for over a year now. But to my mind, this is a retail rally that is now expanding into large stocks. So if you look at the performance of the CNI 1000, the 1,000 largest stocks in China, so far this year they're up 14%. But the CNI 2000, which is the next 2,000 largest stocks in China, that's up 38%. And retail investors like the stories in these smaller stocks, be it AI or robotics or aerospace, and they've liked the fact that institutions don't own these because they're worried if the market goes up that institutions will sell their holdings that they bought years ago. But now we've had this pretty substantial breakout in the Shanghai Composite yesterday, breaking above its high of March of 2022. I think we're actually at the cusp of a very powerful rally in China, not so much predicated on impending stimulus, but I think momentum, really. It's a good old-fashioned retail market, and the margin debt in China today is 2.3% of market cap. Back in 2015, it got up to 4.8%. So I believe there's more to go.
Yeah, I was just going to ask you, I mean, the importance of the retail investor. How much confidence is there on the mainland? We're seeing turnover continuing to pick up. They're sort of sitting on household savings as well. How important is that as a factor?
Very important. China, mainland China, is a retail market, and then Hong Kong is an institutional market. But there's a lot of money in China. Much of it is sitting idle in bank accounts, to your point. Also, we should recall that interest rates are low. The 10-year government bond yield is 1.8%. And insurance companies in April just saw a major reduction in the cap that they are their equity investment cap. So they're now allowed to, reduction. So they're now allowed to invest a lot more in equities. And there are a lot of high-yielding equities in China, which I think you're also seeing. That's another, sort of important reason to explain why the market can keep going up.
Mark Matthews, really good to have you back. Head of Asia Research at Julius Baer there with his thoughts on how the markets are trading at the moment as we continue to watch this one stock in Japan, SoftBank. We have now heard that they have agreed to acquire Intel stock through a new share issuance. We're talking about part of this push by both companies to what they say is deepening their commitment to advance U.S. tech and chip innovation. SoftBank will be paying $23 per share of Intel common stock, and the investment will total $2 billion. And take a look also, we are following earnings season in Australia. BHP coming out with their full-year profit, fall of 26%. Key exports such as iron ore and coking coal remaining under pressure. We continue to see this soft demand from China. We have seen Woodside Energy also disappointing to the downside. Net income in the first half coming in at $1.32 billion below expectations, and sort of a similar picture for CSA as well, coming in below expectations, and the stock falling about 8%, April.
Yeah, and Shery, of course, we'll have some conversations coming up with the BHP CEO Mike Henry, Woodside Energy CEO Meg O'Neill later today. It's quite a lineup for more on all these earnings. We'll also be speaking with CSL CEO and Managing Director Paul McKenzie on the firm's spin-off plans. That interview is happening at 10:45 a.m. Hong Kong, 12:45 p.m. Sydney time, and we'll hope you stay with us for those conversations. More ahead on the Asia trade. This is Bloomberg.
The war is going to end. When it ends, I can't tell you, but the war is going to end, and this gentleman wants it to end, and Vladimir Putin wants it to end. I think the whole world is tired of it, and we're going to get it ended.
The situation is this, that the US and some other countries have said that they're against NATO membership for Ukraine. The official NATO position since the summit in 2024 is that there is an irreversible path for Ukraine into NATO. But what we are discussing here is not NATO membership. What we are discussing here is Article 5 type of security guarantees.
The other material outcome was the agreement that will now be a bilateral agreement between President Putin and President Zelensky. That was after a phone call between President Trump and President Putin during the course of this afternoon, followed by a trilateral, which will then add in President Trump.
President Trump and some European leaders speaking after they met at the White House. Trump is now calling for a meeting between Russia and Ukraine. Bloomberg senior editor Derek Wallbank is with us. So, Derek, it is quite a relief, I guess, the positive tone that is coming out of Washington. It looks like we could see a bilateral, then a trilateral. What is your read on what's next?
Well, Avril, I think that's the goal, right? Let's stick with this in terms of goal settings, because nothing is fully agreed to. And in this sort of situation, especially between warring nations, nothing is agreed to until everything is agreed to, right? So Trump is suggesting let's have a two-way meeting between Vladimir Zelensky and Vladimir Putin. This would come years after the Russian invasion started, with the battle lines very much a slow crawl in either direction in the eastern side and the southern side of Ukraine. It would potentially involve some very painful territorial concessions for Ukraine, but would also perhaps preserve a path for peace here, at least a path for stopping the fighting, which is what Donald Trump has said he really wants. Ukraine is looking here for a couple of things, one of them being ironclad security guarantees. Now, they want this from the United States. They also want this from the rest of European partners. And so what you're hearing, especially what Mark Rutte was saying, was an Article 5 style deal. Now, Article 5 is that key provision that is basically the teeth of the NATO alliance. It basically says if you attack one of us, you attack all of us. It's rarely invoked, but it is the most foundational power of NATO. Essentially, you wouldn't dare attack even the smallest NATO member states, because that would be the same as attacking the United States, the United Kingdom, and France, and et cetera, et cetera, et cetera, right? So that's the style of security guarantee that Zelensky is seeking here. Now, it's important to note, Ukraine has had security guarantees before, right? Throughout its history, ex-Soviet Union, there have been a number of security guarantees. Russia has even been part of some of that in terms of who ought to be ensuring that Ukraine is sort of territorially okay. It finds itself in the situation it's in.
On those security guarantees, actually, Secretary Marco Rubio speaking right now on Fox News, saying that the security guarantee will be in place after a peace deal. Do we have any ideas right now of what the sequencing could look like in these conversations headed towards an eventual peace deal?
Well, Shery, it's a great question, and we don't really have too much. You actually saw at the White House some of the European nation leaders pushing for the idea of a ceasefire first. Trump actually came back on that and said that the peace deals that he has done haven't needed a ceasefire before you've actually gotten to peace. And so it seemed like he was pushing back on that idea as well. European leaders would like that ceasefire to sort of be coming first, but that doesn't appear to be the situation we're in. The other thing is that we were looking for this to be a trilateral meeting as the next step between Trump and Zelensky and Putin. Trump now saying, no, actually, the way that this is going to go is a bilateral, Putin and Zelensky, and then I'll come in and help out and try and round this out and get this done. So that's a change in sequencing, certainly coming out of these talks. But make no mistake, these talks were much more positive, certainly the last time Zelensky was there. And everyone is leaving these talks from all sides of it saying that there was a lot of progress made.
Bloomberg senior editor Derek Wallbank there with the latest on Ukraine. Let's turn to New Delhi because the global geopolitical chess match over there continues today as well. Chinese Foreign Minister Wang Yi due to meet with the Indian Prime Minister Narendra Modi. Earlier, both sides expressed hopes for better relations in a bid to strengthen ties. Amid unpredictable U.S. trade policies, our chief North Asia correspondent Stephen Engel joins us now with the latest. So what's at stake for China and India, Steve?
Well, obviously, they're taking this opportunity to bridge their differences, and they've had many years of differences, frosty relationship because of border disputes and also concerns about various competitive advantages on industries. And that's why there's been some restrictions imposed by both sides. China doesn't want to export its big technology advancements in EVs and batteries to a place like India that has potential to rival it on the manufacturing front, and India doesn't want to be flooded with Chinese large-scale investment. So there's been some differences, but Wang Yi sees an opportunity. Narendra Modi sees an opportunity amid the global tariffs from the Trump administration, upwards of 50% on India because of India's purchasing of Russian oil. So that has created a bit of a rift there. But India has been very good, let's be honest, at playing both sides with the two big global powers, China and the United States, sort of its own strategic ambiguity. But this is the opportunity that you're likely to see ahead of this trip to China at the end of this month by Narendra Modi. So they're kind of setting the tone right now. Wang Yi going to meet with Modi today. This is Wang Yi's first trip to India, by the way, in 3 years. Modi going to China for the SCO, his first visit to China in 7 years. So a lot is at stake.
Steve, thanks so much. Our chief North Asia correspondent, Stephen Engel, with more on that geopolitical chess match. Plenty ahead. This is Bloomberg.
We're watching SoftBank, the company confirming plans to invest $2 billion in Intel. We've also learned that the Trump administration could be taking a 10% stake in the U.S. chip maker. Our Asia tech correspondent Annabelle Drewlers joins us with more on this. What do we know about the government investment?
Yeah, well, it's a very significant level of investment, of course, but it is interesting or notable as well that Intel essentially was already in line for funding through the US Chips and Science Act. That could be converted into equity from the US government instead. So Intel was looking to get nearly $11 billion under the act. That could be converted with the Trump administration, as you said, taking around a 10% stake in the business. This isn't confirmed just yet. It is our Bloomberg exclusive information, though, and we're getting that from speaking with at least one White House official, as well as several other people that are familiar with the matter. Moving forward, the stake of the size, or the size of the stake rather, could shift. Of course, the Trump administration may not proceed with the plan, but as I said, it is important to note that Intel was already looking to get funding from the US government. Converting it, though, into equity speeds up that timeline because grant funding would have been dispersed over a much longer period of time.
Belle, we saw how Intel closed lower, but that's being reversed in that late trade by the SoftBank investment news.
Yeah, that's right. So this came in the last hour, but essentially SoftBank's agreed to buy $2 billion in Intel stock. This is a move that does already extend its US investment efforts, of course, and also, importantly, is a vote of confidence because Intel as a company has been struggling. We know that. Stagnant sales, continuing losses. New CEO or newish CEO, Lip-Bu Tan, certainly has a really big turnaround effort ahead. I mean, SoftBank really not very much changed in the session, but Intel is really where you've seen those moves because we had, as you said, that close lower, that jump, though, in late trade of more than 5%.
Belle, thank you so much. Annabelle Drawlers for us there. We'll have more heads on the Asia trade. This is Bloomberg.
We get you to breaking news out of Australia. We are getting the consumer confidence from Westpac rising 5.7% month on month to 98.5. Now, this is a level that we haven't seen in 3.5 years. Yes, pessimists still outweighing optimists, but we might be seeing more consumer confidence surging in August after the Reserve Bank cut interest rates for the third time this year in Australia, and signaled also further easing is likely. It's been 42 months since Australian consumers last registered a sentiment reading above 100, which would be the second longest period of continuous pessimism since the survey began in 1974. But for today, the August number coming in very close to that 100 level at 98.5, surging 5.7%, Avril.
Yeah, Shery, there's also some optimism in the form of BHP's share price. You take a look at what we're seeing as its earnings dropped a couple of hours ago with that full-year profit meet and the dividend beat. Investors are rewarding a stock that already has been hovering at really pricey valuations. I think the priciest in the past couple of years are around those levels. Woodside, though, going the other direction. We are seeing first half underlying profit slower than what we saw a year ago. Bloomberg's Asia Energy and Commodities editor Andrew Janes is with us. So, Andrew, just your take first off on these BHP earnings. Looks pretty solid. Are you expecting more to come from the miner?
Well, net income at BHP was down 26%. However, that was largely in line with the expectations. It was mainly down on low prices for coking coal and iron ore. I mean, those are essentially, over the longer term, these are sunset industries, but BHP is still pretty heavily reliant on it. The silver lining, if you will, for BHP was copper. Earnings are up there. BHP has sort of said repeatedly that it wants to own more copper assets. Copper, of course, is very important for the energy transition. And, of course, it had the bid for Anglo last year, which was ultimately unsuccessful. But, yeah, copper providing the silver lining. It's also got a fertiliser project in Canada that's coming on stream as well, so it will look for growth there. So, yeah, I guess on the face of it, not a great result, but it was in line with expectations, and I think the company said enough or has enough going on in the future for investors to be pretty comfortable with it at this point.
Investors not very comfortable with Woodside Energy right now. Their first half net disappointing.
Yeah, big drop for Woodside. This was partially due to it booking some costs for exiting some projects. There was a big hydrogen project in Oklahoma in the US that it exited. It's also decommissioned several oil and gas fields. I think adding all that up, it was about $570 million of costs for that. Also, oil and gas prices were lower over the 6 months than they were a year before. So those are the main things driving Woodside's result there.
Bloomberg's Asia Energy and Commodities editor Andrew James there with the latest on those earnings from BHP and Woodside. And we will actually be speaking to their CEOs, Mike Henry and Meg O'Neill, later today for more on those results. Also, we will be speaking to CSL CEO and Managing Director Paul McKenzie on the firm's spin-off plans. That interview is happening at 10:45 a.m. Hong Kong, 12:45 p.m. Sydney time.
In the meantime, Shery, let's take a look at how the broader benchmarks across the Asia-Pacific are faring against the geopolitical backdrop. Some encouraging signs coming out of Washington of peace, perhaps, in Ukraine. Remember about that bilateral, then perhaps a path towards a trilateral meeting. And does this provide Ukraine the sort of security guarantees that it wants to see? The focus, of course, for this week is still going to be about the Jackson Hole Symposium. Against that backdrop, we are seeing the Nikkei tick a bit higher, but it is looking a bit more risk-off in the other parts of the Asia-Pacific. Kospi is 0.8 down at the moment. We're also seeing that drag in the ASX 200, perhaps also the earnings digestion that we got. Woodside among the counters that are down as well, Shery.
Right, take a look at how currencies are also trading at the moment because, Avro, we have seen the dollar rising in thin volumes in the overnight session, but really G10 currencies in a tight range. Of course, we are headed towards Jackson Hole. We are headed towards a Chair Powell speech on Friday. What are we going to get in terms of clues of the next rate cut that could potentially come in September, according to traders now pricing in that 25 basis point reduction. Japanese yen holding at that 147 level against the U.S. dollar. And this coming at a time when the Nikkei is still at record highs, 2 sessions of gains. But today, the big one, the 20-year debt sale that we'll be watching at a time when we continue to see really pressure across the world on the bond space. Treasury is also down. We have seen UK's 30-year inflation-linked yields now hit the highest since 1998. You can see the euro right there holding at that 116 level as the offshore yuan is also steady. We have seen that gauge of Shanghai-listed stocks closing in at the highest level in a decade. We continue to see that rising sense of optimism among small investors who are rotating out of bonds and into stocks. So we had seen that the Shanghai Stock Exchange Composite Index at the highest since August 2015, 20% turnaround since an April sell-off. This, of course, after the sweeping tariffs coming from President Trump. But let's talk a little bit more about that recent stock rally that we saw in China, because could this have a potential for durable bull run? The absence of a retail euphoria in the market likely to limit volatility. For more, Bloomberg Senior Asia Equities reporter Abhishek Vishnoi is with us. Abhishek, so what's the verdict when it comes to the sustainability of this Chinese rally?
Definitely looks sustainable. I mean, what our story, our reporting is showing is that, with indexes hitting multi-year highs, China equities are saying one breakout after the other. There are indicators which are improving both on valuation side as well as on earnings outlook side. It looks sustainable. And, if you look at the ROE charts, the return on equity charts of MSCI China, Shanghai Composite or CSI 300, you'll see that the global part of China Inc. is doing way better and looks to be leading the rally, looks to be delivering much more sustainable earnings outlook. So that part is very, very, people are a lot more confident about that part having a durable bull run. But on the CSI 300 or onshore side, there are still things that can improve, especially on the return on equity part. Other things that are supportive include, like you were mentioning, retail investors aren't scrambling this time. So there is a lot of money still on the sidelines, which can come into the market, especially at a time when, everything else is yielding very low, property is yet to recover. So, there is naturally no other choice for a China investor, if he is looking to invest onshore, but equities. And also, look, government has stepped in. National team and various other funds have been buying the market. Volatility is very low. So these are things that Japan exhibited for a long time before it saw its own breakouts. And China is also sort of recovering from the ashes. So the durability is not in question. It'll be a slow grind upward. But on the onshore side, if there is more improvement on return on equity, then it will become a lot more sustainable for the non-global China Inc. as well.
Abhishek, is this all going to be enough for A shares to catch up with their H share counterparts?
I think H is going to do probably better in the short to medium term. As we were seeing in the data, definitely a lot of money is there on the sidelines, and A share would also play catch up. But, valuations still remain very inexpensive, whether it's H or A. Earnings outlooks are just improving, whether it's A or H. All this global innovation, right from DeepSeek to biotech to EVs, they are getting much more better valued on H share side. We are seeing a lot of A companies also, just seeking dual listing or listing in HK as well. So there would be a catch up from A, but H shares, given the outlook that is there, and given, like we discussed, how the global part of China Inc. is a lot better on ROE side, return on equity side, is going to continue to do better. That's what market participants are saying.
Okay, Abhi, thanks for giving us the lowdown on all that. Bloomberg's Abhishek Vishnoi. More ahead on the Asia trade. This is Bloomberg.
Australian Treasurer Jim Chalmers is hosting a gathering of politicians, experts, business and union leaders at Parliament over the next 3 days in an effort to address Australia's declining productivity. Paul Allen joins us now with more on this. And Paul, weak productivity, a long-running issue for Australia. How do they plan to turn things around?
The plan at this stage, Shery, is to talk about it. So there's a 3-day gathering at Parliament House starting today. There's going to be 45 experts there, as you mentioned, representing the business, union community, as well as politicians, and some pretty heavy hitters to kick things off as well. The Prime Minister will give an address, then the Treasurer, Jim Chalmers, and then the Reserve Bank Governor, Michelle Bullock, will speak as well. And there's also 900 submissions to consider here. So the problem is productivity growth that continues to be in the doldrums in Australia, and just last week, the RBA forecast in its latest set of numbers that productivity growth is expected to keep on easing down to 0.7%, well below the long-term average of 1.6%. So the plan here, well, all ideas are on the table. Cutting red tape is one that features pretty strongly. And just to give you an example, tradespeople in Australia, depending on what state they need different permits, different processes. So there's an idea that that could be cleaned up to get going. Jim Chalmers, who you see there, wants ideas, but already some big things are off the table. He says there's going to be no changes to GST, no changes to the very controversial tax break in Australia known as negative gearing as well. So as to what exactly comes out of this, well, we'll know at the end of the 3 days. So joining us now to unpack this a little bit more, we've got Michael Brennan, CEO at economic research think tank E61 Institute. Michael, thanks so much for joining us. I'm just wondering, to get going, can you unpack for us exactly what the problem is regards productivity in Australia? Because it feels like we've been talking about this for a really long time.
We have been talking about it for a long time. Productivity growth in Australia was quite rapid about 30 years ago. So in the middle part of the 1990s, we had pretty substantial productivity growth on the back of substantial economic reform that happened in Australia in the 1980s and 90s. That's largely stalled in more recent times, and in the last 5 or so years actually gone backwards. And that's complicated fiscal policy, it's complicated monetary policy. It's also meant that real wages have been flatlining or going backwards. For all of those reasons, I think there's now an emerging consensus that something needs to be done, hence the rationale for bringing together a group of business, unions, civil society, academics, other experts and the political class to see if we can nut things out.
Yeah, well, the consensus that something needs to be done has also been around for a very long time, but do you feel like we're going to get to the end of this week with some sort of plan?
I think we will. I think it'll be a combination of things. I think there'll be some specific early quick wins, and then there'll be a few areas where I think we can establish a bit of momentum for some further reform over time. It might be, for example, that long-term tax reform is one of those areas where we could establish a bit of momentum. We may not see quick wins coming in that area.
Tell us a little bit about the low-hanging fruits and what is politically feasible, as well as you balance that out with economic efficiency and really trying to boost productivity, of course.
Yeah, I think some of the low-hanging fruit might be in the regulatory area. There'll be a detailed discussion of regulatory reform tomorrow morning, and that which I'll be a part. I think there are some quick wins, particularly in relation to the approvals of major projects, which have been caught in multiple environmental approval processes, and also housing. Housing in Australia is a particular problem. It's very expensive, and there have been real challenges getting new housing supply onto the market. And I think there's now a bit of emerging consensus and will about trying to get that housing supply moving a bit.
When it comes to labour market productivity, especially when it comes to labour mobility, why has that been still difficult in Australia when the labour market seems tight?
It's an interesting question. Some moves have been made. We've had a recent government initiative to abolish non-compete agreements, particularly for low-income workers. That will help, I think, to free up the movement of labour across the economy from one firm to the other. Though, as Paul mentioned, we do have an issue that across our different state jurisdictions, the licensing restrictions can be quite different, and that can impede mobility across the different states and territories, and it just adds to an overall complexity in the regulatory picture. So I think that's another area where this roundtable is likely to focus, to try and get a little bit more momentum, a little bit more reform of those interstate barriers. More generally on labour market reform, Australia has a sort of a relatively regulated labour market, and on things like general kind of protections around minimum pay and other working conditions, that's unlikely to be liberalised much as a result of this roundtable.
I would know one of the ideas that you're bringing to the table is one of a road user charge, and of course all ideas are on the table here, but is there a political problem as well? Because if I was a member of the opposition, I'd just be rubbing my hands with glee and saying, oh yes, please do, because this is going to help you win every vote of every trade person, every weekender. It was only a couple of elections ago that we saw around electric vehicles. This is going to kill the weekend. Is part of the problem here short-term politics? Is it really hard to get reform done?
It's always a challenge. There's always a bit of a political advantage in opposing some reform, and that nothing changes in that area. Though notably, the opposition is represented at this roundtable, and so we'll see if we can get a degree of consensus. I think road user charging is one of those issues that is particularly tough. We do have what we would call a burning platform in Australia, because our traditional way of raising revenue for roads, which is the fuel tax, the fuel excise, is a declining source of revenue because of the rise of electric vehicles and because of the rise of energy efficient vehicles. So we do need to replace that revenue in some form, and some type of road user charging, whether that's based on distance travelled or it's based on congestion in our major cities, which is a particular issue. I think that'll be the question going forward.
In one sense, there's probably an air of inevitability about that as well. But there are things that just aren't on the table. Already Jim Chalmers has ruled out any changes to negative gearing. And for viewers who are unfamiliar with this, this is where you can borrow money to buy an investment property, lose money on that and claim it as a tax break. And it's often blamed for runaway house prices. Do you think it's helpful when these kinds of things are just ruled out, even though there's obviously a problem behind them?
I think for the most part, as I said, some of these tax things will be a longer term story, particularly the taxes on housing. Negative gearing is a general principle in our tax law. It's not specific to housing, although it is mainly used for housing investment. But there are other aspects of investment in residential property. We have a concession on the capital gains tax, for example, that is provided in relation to long-held investments, including those in real estate, in real property. And that's something that I think the government could potentially be open to, looking at whether that concession is too generous. But I think in general, tax reform is a longer-term issue in Australia. I think there is at least an emerging consensus that we need to do something to relieve the burden of the income tax, which is falling too heavily on working Australians, prime-aged workers. And we're probably not taxing enough some of the forms of accumulated wealth, particularly around the family home, superannuation and investment housing. And I think if we can just inch towards solutions in those areas, we'll have made some progress.
Do you feel like Australia's economy is broad and deep enough? I mean, there's a long-running joke that it's about houses and holes, mining and property speculation. Is that a fair criticism, and is enough being done to broaden the base?
I think it's a little unfair in many ways. Australia does have quite a broad economy. Mining is an important industry, but as a share of the economy, it's not that large. We do have a large financial services sector, partly by virtue of the superannuation industry. We have a large construction sector. We have a more modest manufacturing sector. But like all economies, like all developed economies, we are predominantly now a services-based economy. About 80% of the economy is services, about 90% of the workforce. And many of those services are quite high-end knowledge services. And if anything, I would say the Australian economy has a pretty strong track record of proving resilient to shocks and pretty diversified.
All right, Michael Brennan, CEO at the E61 Institute, as we await the outcomes of Australia's productivity gathering. 3 days in Canberra, Shery.
Yeah, great conversation, Paul. We do have more on Australia ahead every Tuesday at 10:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong. Also, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's rolling global business. Find it on Apple, Spotify, or Bloomberg.com. We have more ahead. This is Bloomberg.
The latest from the corporate front. KKR-backed South Korean fashion retailer Musinsa is weighing an IPO, inviting several investment banks to pitch as lead managers. Local media say a listing could value the company at around $7 billion, potentially minting a fortune for founder Cho Man-ho. Musinsa's global store, launched in 2022, has grown rapidly, reporting a 25% jump in sales last year to around $860 million. Chinese electronics manufacturer Anker Innovations is said to be considering a Hong Kong listing as soon as next year. The firm's Shenzhen-traded shares have surged more than 50% this year, giving it an $11 billion market value. Founded in 2011 as a charging brand, Anker now sells everything from 3D printers to robotics appliances. Now, we're also keeping tabs on some of the stocks to watch when markets open in Hong Kong and mainland China. It's really the earnings-related developments that we're watching from Chinese EV makers such as XPeng and Xiaomi. Those earnings are due. And of course, in the past day, we've seen PopMart popping about 5%. Again, this earnings scorecard against the backdrop of the Chinese consumer slowdown overall and the price war that's underway among some of these Chinese tech names, Shery.
Yeah, and perhaps one of the reasons why we continue to see speculation that we might get more stimulus coming out of China and really propelling Shanghai-listed stocks close to the highest level since a decade ago or so. And you can see A50 futures there also closing with gains of 0.2%. The Shanghai Stock Exchange Composite, in fact, strongest finish since 2015, 20% turnaround since that April sell-off when President Trump imposed those sweeping tariffs. U.S. futures trading in a narrow range, but that's been the case for lots of assets this week. All of this ahead of the Jackson Hole Symposium, of course, which starts on Thursday, and ahead of Chair Powell's speech on Friday as well. With the Fed signal a cut come September? That's a big question for investors this week. That's it from the Asia Trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China Show is next. This is Bloomberg.